Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, August 19, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, they continue the melt up, ramp higher situation from the first part of August low on August 5th. It's been nothing other than a straight line higher since that point in time. The market basically corrected about 10% from the high to the low in early August. And here we are just a couple of weeks later. They've taken back just about all of the decline. They're knocking on the door. They're a stone's throw away once again from the all-time high. Pretty remarkable move off the low, if I don't say so myself. What do we have on the docket this week? Is there anything important? Well, tonight we have what's called a super blue moon. We'll see if the new moon or full moon has an impact on the market. Maybe there's a slight turn, maybe there's not, but it's information that we can know about in advance. Not every full moon, new moon situation results in a turn in the tape. However, that does occur, so it's information that we're accustomed to knowing. We also have the Jackson Hole Symposium, the end of the week, beginning on, I believe, the 22nd, which is Thursday, running through Saturday. What is that? What I call that is the banker boondoggle. Federal Reserve, Jerome Powell will speak out there, bunch of the bankers, bunch of highfalutin people. It's the Jackson Hole banker boondoggle. And it's not just bankers, it tends to be a who's who. It's a summer boondoggle. Are they going to issue a surprise to the market while in Jackson Hole? Odds favor they will not. It's not the Fed's mantra. It's not their MO to surprise the market, especially in advance or right after one of their meetings. They tell you what they're going to tell you. They tell you what they told they're going to tell you, and then they tell you again. So there's little surprise in what the Fed is going to do. They try and telegraph just about everything. Let's talk a little bit about where we are in terms of the tape. Well, you can see right here, we're right at a breakdown candle high. The high is 559.52. They went out at the high today. The high of day is 559.61. Close 559.61. Went out right on the high. That breakdown candle high once again was 559.52. Here's a 5-minute chart. You can see the ramp higher into the end of the day to close right around or even slightly above that breakdown candle high. 559.52 is the number. Closed today slightly above that. They are trading down a little bit after the closing bell, back inside of that breakdown candle high. So that's going to be a sticking point. Above that high, you start to get into no man's land. There's a gap up here, and the gap pretty much coincides right around the all-time highs. You're like 1% plus, maybe 1.5% away from the all-time highs right now. It's a stone's throw. It's another up day. Pretty much that's it. Above all the moving averages, the trend is your friend. There's nothing bearish on the tape at present. You see how quickly they do a repair job. Above all the moving averages, weekly chart, daily chart, doesn't matter. We're approaching all-time highs once again. Technically speaking, absolutely nothing wrong with this chart. If they put in some kind of a reversal pattern, that's a different story. That's Mrs. Market's way of telegraphing something yet to come. But as it stands right now, all we have is a market that took a dip, was rescued, is now reapproaching the all-time highs. Nothing more, nothing less. What we'll do, you know how we talk about volume from time to time and how people will say, I get emails on and they'll comment under the video, aren't you concerned with the low volume? And my answer is always the same. The market's been going up on low volume since March of 2009. So no, it doesn't concern me with the low volume. I don't look at it as bearish. In fact, I look at it a lot of times as the opposite. Now, case in point, let's watch the volume. Here's a low in the market on August 5th, just a couple of weeks ago. Look at the spike in volume. That was a throw-up low. It was a capitulation of sorts. They threw the baby out with the bathwater. It was a Monday morning flush, heavy volume, reverse the tape. Now here's another higher volume candle as compared to what was previous. That's the way we're looking at it. It's on a relative basis. Well, that was somewhat of a low situation. They were dipping, found a low, went up. That was that last day of the dip, heavier volume. Here's another higher volume as compared to what was going on recently. This is a low, highest volume candle of the normal or recent past of this candle or of this time frame, and they went up from there. So you can see that the upticks in volume tend to be turns in the market. We could find like scenarios on the upside, but there's more on the downside in an uptrend. Question is, will there be a pullback before they make a new high, a new all-time high, or will the pullback wait until after the new all-time high? And frankly, the answer is we don't know which one. We're going to use Mrs. Market's activity and actions to determine. We're going to let Mrs. Market give us the sign and or signal of a trend change. What is that? Well, it's taught in the course at Lazy E Mini Trader. We're looking for an intraday reversal. Maybe it's on high volume. Maybe we're looking for a doji candle. Maybe we're looking for an on-time situation with a doji candle or a reversal candle. An intraday reversal. Maybe it's a gap and crap. Maybe it's one or a combination of those things. We're looking for Mrs. Market to give us a sign and or signal of a trend change. Until that point, we're in a bullish tape and we will respect the tape. Just for point of reference, think back. This is a learning opportunity. Does everybody remember what the news items were when the market was heading down? Then the Monday over here with the flush out, the week before, the Wednesday, Thursday, Friday beforehand, you go to a daily chart. Does anybody remember what was going on in the news over here? Was it Fed related, interest rate related? Was it war related, geopolitics this? Was it the fear if Joe Biden wasn't going to run for another term? What was going to happen? Was it going to be Kamala Harris? Was it going to be somebody else? What was the news item back then? What were the news items in plural? Go back and take a look. And then go back and take a look at what we were saying in these videos. What I was saying in these videos in that time frame was, on the weekly chart, markets go up, they pull back. Markets go up, they pull back. And what we did was we cited this stuff over here. Markets pull back, they go up. Markets pull back, they go up. And that's what we were saying at the time without a shadow of a doubt. Go back to the video tape. We had plenty of pundits, talking heads, analysts, who knows, calling for a crash. It was going to be a crash. I had somewhat of an email indicator working. I had folks in the live room talking about a crash. I had emails talking about a crash. Markets go up, they pull back. Yes, there will be another crash. Can I tell you exactly when that's going to be? Not so much. Yes, there will be another crash. Was now the time for that crash? And what I've been telling traders in the live room during that period of time, and what we said in here, now wasn't necessarily that time. Time is more important than price. Where have you heard that before? Now, if you asked me, were we going to be back approaching or close to within a chip shot away from the all-time highs in 11 days, if you asked me that on the 5th of August, I would have said, that's pretty much the unlikely scenario. Anything's possible is what I would have said, but I wouldn't bet on it. Well, guess what? That's precisely what happened. Stone's throw away from the all-time high in 11 trading days. Pretty remarkable move. It was pretty much a one-way ticket today. It was a melt-up / pretty much a gap and go type of situation. But let's see what we did have on the board from a numbers perspective. Remember, I'm going to point out a couple of important things. What I urge you to do is pause the video, read the notes, and go back and double check the work on the chart. Let's highlight a couple of important things. We'll start with an early pivot today coming in at 554.05. Now let's define what really is a pivot. Well, a pivot is where the market is above a pivot. She's bullish, has another leg or two or three higher in the cards. Below the pivot, the bears are really in control, and the bears can push the prices down at least to the next number below, and then so on from there. So bears are in control of below the pivot, bulls are in control above the pivot, nothing more, nothing less. 554.05 was the pivot today. 5-minute chart, right of the vertical is today's activity. 554.05 is the blue horizontal line, and you can see within pennies that was essentially low of day. How you doing? Did we have traders buy in the pivot? Yes, we did. Live room inside the numbers. Pivot was support. She never looked back. Remember, pause the video, read the notes, go back to the chart, and double check the work. And you can see as the morning goes on, before the opening bell, certainly updating the numbers. We had some important stuff, 555.15, 556. You could see 555.15 stopped the tape. They bantered back and forth. That's where they failed, came back to the pivot. Once they got above that, they were free to go to the next place. And we were already into somewhat of an intraday melt-up situation. It was very, very low volume. Very, very low participation. And what I told traders in the live room was, and wrote in the notes, which you'll see in a moment, sometimes you can't help but think in terms of never short a dull tape. That's what kind of came into mind later on in the morning. You could see here the next place is 556.85. There was a big zone. This was split up later on, but 556.85 was the next number. And you can see here, that's 556.85. The numbers were working. It's just the pullbacks were very shallow. All in all, gave you about 10 S&P handles, but the market was very quiet, and it was basically a torturous grind higher if you were trying to short the tape. That's the point. That's why I call it, in the live room, traders know this, I call the middle part of the day, trying to short the market around lunchtime and beyond, I call that torture time. Pause the video, read the notes, go back to the chart, and double check the work. 554.05 is the pivot, 556.85, all that stuff. You'll see it over and over again. And then they just went on a grind. So again, pause the video, read the notes, go back to the chart, and double check the work. All in all, we basically had one bona fide trade we can point to in the S&P from the pivot back up. What about stocks on the move? We had HPQ, Shake Shack, and Bros. Bros didn't hit its entry objective. We had a good one in that last week, but we'll take a look at HPQ and Shake Shack. First up, HPQ, 34.37. They spiked it by a few pennies, ripped it back up in the other direction, gave you a little bit more than the required or minimum required base hit. Base hits put you in the Hall of Fame. We never know which ones are going to give us the rocket ride. About Shake Shack, 102.95, spiked it by a little bit, ripped it back up in the other direction, provided the trade. It's funny how that works. And oh, by the way, did I mention the numbers work? Just ask yourself, what could you do with some of this information during the morning session? The SPY stuff, if you're trading in the SPY or would like to trade in the SPY, the S&P, the ES, options, exchange traded products, they're all the same. It's directional trades. What about stocks on the move? Here's two more examples today. You had Shake Shack and HPQ. Riddle, low stress, base hit situation. What's going on over in Camp IWM? Above all the moving averages, trend is your friend. Let's start there. What's the next thing they're trying to do? The next thing is this gap that needs to be closed. The official price is 216.58, and therefore that's your next target in Camp IWM. Weekly chart, big weekly down candle. Is this a retracement of that reversal candle, or are they above all the moving averages? Trend is your friend, and they're just going to climb to all-time highs once again. Or let me correct that, not all-time highs, but recent highs. The all-time highs are back here. That's not the all-time high here. That's just the recent high. The dominant thing are the bigger time frames, moving averages. So therefore, the dominant thing is above all the moving averages on larger time frames, the trend is in fact your friend. Yes, you have a weekly reversal candle. They made a new high. They reversed back down. It's a bona fide reversal candle, not on tremendous volume, but definitely a pickup in volume. But what are they doing now? Are they going to reverse the candle, or are they going to just retrace a part of the candle? That's the $64,000 question. We'll stay on the weekly chart for the folks down at the transportation department. Why? Because once again, they're approaching the top end of the triangle situation. So again, if they bust out of the high end, the upper end, this upper trend line, then that is a breakout to the upside. They do not have to wait from a time perspective to get to the apex of the triangle. They can break out or break down at any point in time they want to. Are they going to break out, or are they just running another test of the upper portion or upper trend line of this triangular pattern? Daily chart looks very much the same or similar. It's just blown up a bit. You pan out a little bit and you get the bigger picture perspective or the more granular perspective. The daily chart is the more granular perspective. The weekly chart is the panned out version. Above all the moving averages, trend is in fact your friend. The Q people, they filled the gap today. The gap was all the way over here. That was closed above. They're above all the moving averages. Your next major area of overhead resistance is right around the area of this breakdown candle high over here. We'll call the area 488, 489. Is that the current target / overhead resistance? Can't guarantee they'll get there, but if they do get there, we'll go with first time, best time, unlikely to just waltz right on past 488, 489 in the Qs. It's a first time, best time pullback type of place, at minimum from an intraday perspective. How about the financials? If there's nothing wrong with the financials, it's unlikely there's anything wrong with the overall market. Above all the moving averages, no dice for a bearish situation. Trend is your friend. Where are they? Approaching all-time highs once again. And what do you have? You'll have a bunch of people, analysts, technical analysts, other analysts, fundamental analysts, pundits, talking heads. You'll start to hear, hey, there's a triple top in the XLF. Maybe there is, maybe there isn't. I look at this and I just say they're in an uptrend. The trend is your friend. They're knocking on the doors of the highs one more time. That's it. Triple top, it's bunk. They're near the all-time highs once again that they've been at in where? In July, halfway through July. They were there at the end of July, and here they are again in the middle of August. Nothing more, nothing less. What about Smash Mouth? I got a little lagging situation here. What do you think? Now, we're taking everything at face value, but I got a lagging situation here. I got nowhere near all-time highs, nowhere near the same breakdown candle that we've been saying all along with other markets, that they're approaching this breakdown candle into no man's land. There's a gap up here. They're nowhere close to that. They haven't even got to the 50-period moving average on the daily chart in Smash Mouth. So that tells us that the semi-space is lagging. That tells us either one of two things is going to happen. Either the semis are going to catch up to the rest of the market, the tech space and beyond, or it's a canary-ish type of situation going on. You have a divergence, and the other markets are likely to catch up on the downside, meaning have a pullback to catch up with the lack of progression that the semi-space has made. Divergence, there's a semiconductor negative divergence to the Qs and the S&P. Of note, puzzle piece on the table. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market analysis.